Hello, welcome to the RENT 2023. We are here to talk about ESG beyond the fundraising bullshit pitch, to assess how startups, founders are serious about ESG impact beyond the fundraising pitch to investors and to M&A. My name is Mathias Platin. I've been a VC for 13 years. I'm now the co-founder of TXO, a new investor for emerging operators tackling affordability and sustainability challenges, launching next year. I'm here today with this amazing panel that I will introduce later, but let's start with a statistic. Last quarter, according to Axeleo Capital, that I know very well, 41% of the rounds done by startups had ESG as core business of their pitch and their value proposition. 41% of the startups are involved in ESG or impact. It's very significant, and this is what we are going to discuss today, but also by extension, impact companies have become a key success factor for fundraising. The problem is sometimes we see ESG criteria only at fundraising stage and nothing later, just to check the box to please investors, and it becomes completely secondary later. These extra financial KPIs are more and more valued by all of us, by the market, acquirers, customers, even employees. That's the goodwill of the company. Some founders are emphasizing ES or G criteria. So today we'll ask our panelists how serious are founders and investors around them on their market regarding ESG roadmap and regulations as well, because a lot of regulations have arrived on the market. What are the extra benefits of such a roadmap? And most of all, how could founders and investors work on extra financial performance intentionally, very important, to create additional value on the long term and go beyond the simple bullshit fundraising argument? Here's the panel. I'm pleased to welcome an impact investor, Adrien. I will let you all present yourselves. Hi. Arnie from Amavi Capital, PropTech VC, and Theo Galula from Aviv Group, M&A expert. Guys, can you introduce yourself quickly in 1 minute, what you do, what your company does? Adrien?
Sure. So my name is Adrien Panetier. I co-founded Proes. We have two businesses, very linked. We invest into early stage, high impact startups, mostly in France. So we are raising a fund, 40 million euro fund, to invest in this sphere. That's the first step. I'll explain later what we do, but we basically are looking for both high growth in terms of business and also high impact. And we not only measure an impact, but also amplify the impact alongside the management of the company we invest in. That's the first side of the business. The second side is we also do fundraising and deal by deal. So we look for limited partners for each deals we invest in, and we structure the deals both in terms of business, of legal, in terms of impact as well.
Thanks. Arnie?
Hello. I am Arne, one of the co-founders of Amavi. We're a pan-European PropTech fund, so based in Belgium and Sweden. And we invest in, as I said, in PropTech companies throughout Europe. But of course, PropTech is a very broad concept, and we define it as every company which brings efficiency increase and sustainability increase to the built world. So it's, of course, as I said, very broad concept, and that entails software companies, that entails hardware companies, and of course a lot to do around, let's say, the ESG bucket, again, in the broadest sense. Myself, I have a real estate background, so I do understand the pains of the industry a bit, but we are, as a founding team, we are composed of real estate people, technology people, and private equity people. Because really at the intersection of those three industries, we think you make interesting investments. So you need those very different angles to approach the solutions from the right angle.
Thanks, Arnie. Theo?
Yes, so I'm Theo Galula. I'm part of Aviv Group investment team. So as a reminder, Aviv is actually the leading pan-European marketplace on real estate. We notably own portals like Seloger, Meilleurs Agents, and Logikimo. And our goal is really to help people unlock the perfect place. So this is why today we're building this platform across Europe. And one of our focuses today is to help inform and facilitate the energy renovation space. So we're actively looking into that space. And in terms of deal structure, we both look into, of course, M&A, but also partnership, minority investment, any type of ways for us to accelerate on our mission. And Aviv Group, actually, we're 2,000 employees across Europe. We're part of Axel Springer, which is a German media house that is backed by KKR. So really excited to be there and to go beyond the fundraising pitch with all of you guys.
Bullshit. I said bullshit. Maybe for a start, because we're going to combine extra financial notions of performance, ESG, impact. Adrian, you're the expert in impact, so I will start with you.
Sure.
How do we differentiate ESG impact, and why does extra performance, extra financial performance matter?
I think it's about what business you want to build in the future, and whether or not you want it to be as sustainable as possible. You can aim for short-term profits, but destroy what you're sitting on. And if you do that, then there is no long-term profit. You won't be able to sell the company. You won't be able to offer future generations, future shareholders value of the company. So if you do that, then there is no turning back. We at ProES, we aim to both be profitable, clearly. We invest into professional businesses, but also businesses that have an edge thanks to impact. We are looking for the virtuous cycle. What is good for EBITDA is good for impact, and what is good for impact is good for EBITDA. And if you find this holy grail of this virtuous cycle, then you've won everything. So I think it's not opposing impact, ESG, and business. It's about doing all of them together, because it's not. It used to be a nice to have. Now it's a must have. If you don't have that, then you will miss out on customers, on markets, on suppliers, on employees, and you won't be able to survive. You have to show that you care for the society or for the environment if you want to be a successful business.
The dual performance.
Exactly.
To Arnie and to you, there are a lot of regulations. So this time I won't ask Adrien, who knows them perfectly. I want to know how these regulations have influenced your day-to-day business and your analysis and your strategy in general. For a start, Arnie?
Well, if you zoom out a bit, so we're talking about a huge industry, right? One of the largest industries worldwide. It has also the largest impact in terms of greenhouse gases, and this is why actually PropTech is such an interesting place to be in. The only big disadvantage of the industry is that it's extremely slow. But when I say extremely, I mean extremely slow. So it needs some kind of external pressure to really start adopting new things, new innovation in general. And we've seen this with COVID. It adopted, or it made a lot of things possible which weren't possible before, like remote working, digitized way of working, etc. And now I think the second wave indeed is a regulatory wave coming upon the industry. So it's not optional to go for bio-based materials to start construction. It's not optional to look at water preservation methods, etc. It's getting mandatory. And this is unfortunately the only way to change that specific real estate industry. And that has made business models pop up and made business models possible which just weren't thinkable even before. So it actually changed the industry completely, and that's the biggest, I think, pressure and opportunity we currently see in the industry.
I fully align. For us, it's, as you mentioned, the regulatory part is becoming really more important, and we have a role as a company that is present through marketplaces to inform and educate the market. We see homeowners whose main concern today is regarding this increasing relegation about their properties, and we're actually working closely with the ministry in France, but also on data to bring transparency and to reinsure the market and the homeowners about what's, for instance, the right price for my property, what's the right budget I should have when I renovate a property. So for us, it's really bringing transparency through data and also through any products we can bring so that people feel reinsured and not pressured by this increasing regulation.
What's the most influential regulation for you? There is Article 9, SFDR, there are some taxonomy or ISR in France.
Well, I think you're the expert in terms of taxonomy and all the regulation out there, but what my experience is that everything comes from Europe in the first instance, so like the European taxonomy, but it's still very, very unclear how is then needs to be translated onto a national level, how do companies actually need to cope with it, how do they need to deal with it, etc. So if we look at the current translated national regulation, that is to me the biggest driver because it's very tangible. Like for example in France, the RE 2020, that's actually very tangible, like what cap you have on your carbon emissions. And that is actually causing a lot of stress with developers currently because they are of course faced with something which is very tangible, very clear, and they don't know how to deal with it. That is the biggest.
I agree. So I think it's not about regulations. I was attending a seminar a few months ago at France Invest, and there was a guy from the European Commission, came from Brussels, and he said, what you see in the article 9 is SFDR, new regulations coming out on the market. You investors, you have to take it as a draft, as a working process. But it's binding for us, we have to abide to it. Yeah, but it's a draft. And so it's changing every 2 months or 3 months. So it's really hard to navigate this and then to build basically an investment strategy that's for a long time because, a fund is 5 to 10 years. So you have to find out how it's going to be in 5 years. So I think the main driver, because behind regulation is the will of the people. It's the will of people, of the voters, the people that live in Europe, and it's increasingly in favor of more impact. And the thing is that impact is a big term; it's hard to define. So any first steps in terms of regulation based on the will of the people is good, although it's a draft, although it's work in progress. So it's really hard to abide by it as an investor, but any step is good. And even if it's a draft, according to the European Commission.
Okay, talking about, we'll talk later about your investment strategies and how it gets influenced by all that. But maybe for a start, from your point of view, what's the founders' level of awareness regarding ESG impacts stuff? We've seen 41% of the deals are about ESG or impact last quarter. It was the same last year, actually. So it's becoming more and more serious. How serious are funders? How do they know about ESG impact and the value of all that? Theo?
I think they're all very serious. We're not there to judge founders and criticize them. I think there is a big focus on the E part today, because that's probably the biggest business opportunity out of the 3 letters. What I think we're missing a bit is the S and the G, and notably to combine a business model that is, for instance, focused on energy or environmental topics, but also as a company have a purpose and a way of working that aligns with the S and the G. So everything related to the way you work, to the share of female leadership that you have as a company, the accessibility of your products. So all this internal part, I think that's something that is a bit missing in the speeches of founders. It's not something that we ask them, of course, when we meet them for the first time, but still something they could progress on.
And maybe for Adrian, basically, any specificity in France on the French market regarding the maturity of founders in terms of impact ESG?
Well, I spoke to one of the leading LP in limited partner in Europe. It's called the European Investment Fund, and they said that France is really ahead of the game in terms of impact. For once, we heard of something, and not only for luxury markets, but we heard that stuff. But we are ahead of it. Even ahead of the USA, of Anglo-Saxon countries, that English-speaking countries, and I think it's part of the French culture, it's getting into the French culture to both look for environmental and social issues. So and clearly when I meet founders, maybe referring to the last questions, most of them, also because I have bias because my fund is impact investment fund, but maybe 90% of them that I meet have already thought, even if they are early stage, they've thought about their strategy, and maybe 80% are already managing their businesses. Their KPIs. They're obviously looking at the cash, EBITDA, growth margin, obviously, but there is 1 or 2 indicators that they look at, maybe every month or every quarter, that's related to impact, either environmental or social impact. And this is also very linked to our business, because when you have a look at the holy grail, the virtuous circle, where it's good for my business is good for the people of our environment, well, it's directly linked. You have to build bridges in between the financial numbers and what it does for the society or for the environment.
Only 90% of your deal flow?
Well, first of all, the companies that we see, and again, I think it's a valid point, we are of course biased because we specifically look for companies within PropTech bringing a sustainability or efficiency increase. So obviously they are aware and they actually created a business model on the opportunity of ESG in the broadest sense. I think the biggest issue though is that their potential customers are a lot less aware of ESG. That's basically the whole issue in PropTech. But indeed, if you look at our deal flow, and again biased, I would say that 75 to 80% is indeed ESG focused. But let's indeed not forget that ESG is a three-letter word. So it's not about energy or environmental only. It's a lot about the social aspect as well. For example, the affordability of real estate. And that's a crucial topic within the PropTech companies that we see as well. Not only the environmental part, which is of course crucial and indeed probably one of the biggest opportunities for the next decade, but the affordability of real estate I think is also one of the biggest challenge that the industry currently faces. So looking into new business models, new ways of ownership, etc. It's not pure tech, but it's definitely a big opportunity out there as well.
Thanks. Okay, ESG, a lot of E. How do you cope with the S? How do you quantify the S? Because you need to be aware of the impact you have. So social,
on people,
helping lives. How do you do? What kind of tools can you use?
Clearly, when you're purely like an asset owner, you don't care what's going on in the building you own, right? But when you're an operator, and we invest into operators, I've said on behalf of Crédit Dépôt, not Proes, but my previous fund, into several early care operators, and one of the discussion before the closing with the founders was obviously how do you make money, what's your business model and stuff, but how also do you create more impact within the people you house, and you take care of. And so it went down to up to the number of times a specialist nurse for elderly care is coming to the houses, and incentivizing the management team on this number of times. I don't know the number of times that there are events organized within the houses, because we know that it breaks down the solitude, in French, but being alone, the loneliness of the people that are being housed, and we know that it leads to cognitive, negative stuff for them, and aging, and more fast aging. So and at the end, it's good for the business, because the people, they stay healthier longer, and they stay longer within the houses. So the virtual cycle is
lifetime value of the customer
exactly
extends.
Yeah. So it's both very impactful in terms of for the people and also for the business.
Thanks. So how does ESG, what's the weight of ESG in your own structure analysis? We've talked about the analysis, but how have you adapted your companies to do these new ESG criteria, impact criteria? Theo?
So for now, it's quite new to us, to be honest. I mean, we have ways of looking at companies, looking at commercial, financial, tax due diligence. The ESG DD is relatively new for us, so that we're starting to ask questions to the founders about their impact. But even them are a bit surprised coming from a corporate that we ask this type of question. So this is something that we're trying to implement. But it takes time, and I think it's also our role collectively that we systematically ask these questions, so that when they come to us in the first time, they present us some metrics, and that we don't need to surprise them, by coming with some question about, okay, what's your governance structure? How do you recruit people? What's the accessibility of your website, for instance? Things that could be quite surprising for them. But the more we do it, the more education there will be on the market, and the better I think the interaction level will be in the future.
Arnie?
Well, we don't have any specific criteria in assessing companies, but as said, companies within the E bucket and companies within the S bucket automatically are qualified as deal flow, because that's the companies we typically look at. But we have a specific attention for the composition of teams. We are also requested by our LPs to report on that, like the DEI, the diversity, equity, and inclusion. So we do at least annual surveys to look at how diversified are teams, how do they feel at work, can they speak up about problems, etc. That we do, and we also report on. We're not really penalizing or remunerating companies on that. It's just at least knowing what the situation is, and if it's very bad, of course, then we can also try to change that. But it's not a specific criterion. Obviously, just from a good investment point of view, we obviously like diverse teams. So it's not that we have quota that we need to invest in female founders, for example, but obviously we like to see that in founding teams, because it just gives a good dynamic and increases the success rates, right? That's all.
And they perform better.
They do.
I mean, the numbers are there, you know. We at Pues, we have a cap on at least 30% of the people we invest in are female. You know, they have to have female at the end of the investment period. But it's also it's clearly a conviction. I mean, it's something we believe in. But it's also just a business decision, because female founders are perform better than male founders. Maybe because they are less, you know. But I think it's also because maybe they are used to work in more diverse teams, you know, and we know that diverse teams, both in terms of sex, you know, but also in terms of background,
origins.
Origins, you know,
worked on
color of your skin,
foreign founders.
Exactly, yeah. It creates value, and so yeah, we pay a great deal of attention to where they come from and whether the team is balanced or not, because we know when you face a challenge, it's never black or white. It's gray all the time, and you have to find the right, you know, strategy and the right stuff. And being diverse helps a lot.
And just to add on the point from Arne, I mean, we are actually part of Access Spring Group, so they are shareholders, and they are pushing us on some metrics that we have to report on. So, for instance, every portfolio company of Access Spring needs to reach 40% of female leadership. So it's something that is quite important for us. And it's really important that the shareholders, so you guys actually, do your role in pushing the portfolio companies and coming with some precise metrics, I think also helps a lot to implement this in the group.
Coming back on quantifying impact and social impact, what are the tools you provide the founders so that they are aware of their impact? How do you proceed beyond the analysis? How do you help them be aware of that, quantify, to reach the report stage?
Well, it's very interesting. It's a long process. It's not an easy path for founders. I always say that you have to commit to impact. You have to commit to impact. And once if you commit long enough to impact, then it's a positive stuff for your business. Then it's then you get into the virtuous cycle where it's good for impact, it's good for EBITDA and stuff. And so yeah, you have to commit to impact. And especially at the beginning of the investment, it's hard because for our case, you know, it's about 10 days the first 6 months that the founder has to spend calibrating the tool they will use to measure the impact. Maybe thinking over once again the strategy to have more impact. We help them for that, you know, because we have at least one board per year where we don't speak about business, we speak only about impact. And then we have a tool both to measure. It's called Impact Track. It's something outside. It's a SaaS tool that we use to automatize the data gathering of the KPIs we're measuring, and we also amplify the impact. So we choose from 1 to 5 indicators that are going to be objectives, and we do an extra financial business plan, as you do a business plan for EBITDA and turnover. We do it, but for extra financial KPIs, and that's directly linked to the business, and we incentivize the founders to attain them, basically. And so over the course of, it's usually between 3 to 5 years, we define an impact roadmap, how to reach this KPIs.
The business plan of a startup never happens to end up as expected. So
you have to.
Do you adapt every month?
Yeah,
or
you adapt.
weeks?
Yeah, you adapt. Yeah.
Okay.
But the journey is more important than the destination, right?
Exactly, and the goal as well.
Theo, any tool you impose?
It's actually more the opposite. I mean, when we acquire companies, actually, we fully integrate them, so we don't really need to impose some tools. It's more actually as a portfolio company of Axel Springer that we have some tools relating, for instance, to carbon footprint tracking. And I'm not close to this topic, but I know it's been quite challenging for our team to really understand how to measure things and how to have a good first number to share with our shareholders. But I think that's also the role of the shareholders to come up with the methodology and to really train the teams so that in a portfolio company, for those it's quite new for them, to really give them the right practice and so that they don't spend too much time on this, because if it becomes something that you have 10 people working on internally for this, well, it could be something really more automatized, that could be improved. So overall, on our side, we're really happy to have Axel Springer who is really helping the team and taking the time because of the experience they have. But there is still a big education to be done with the portfolio company, not only at CEO level, but really going into the operational teams that will actually track the KPIs.
Perfect transition to talk about the benefits of ESG strategy for the startups. Thanks. We haven't prepared for this transition, but it's perfect. First, what is missing in the pitch of the founders you meet in terms of ESG impact awareness? How could it be better for you to understand like unfair advantages of ESG or impact strategies? For a start, and then for you, what are the benefits? Let's start with Arnie. What are the benefits of such a strategy? I mean, in terms of goodwill, in terms of motivation inside the company, in terms of communication, awareness, well-being, whatever.
I think it's interesting to reflect it on the real estate industry first, because what is the interest for real estate to adopt ESG? It's of course regulatory-wise, as we discussed, which is a hard pressure currently. But it's also very demand-driven. That we currently see that in the industry, for example, if you look at the office market, of course, huge amounts of vacancies within offices. It speaks for itself. But on the other hand, there's actually a lack of sustainable office buildings. That's quite interesting to see. So you see that demand currently drives the need for more sustainable buildings. So it's not per se supply driven, it's just the opposite. So as a real estate player, you actually need to adapt to, of course, to demand in the market. And that's just also very strong driver, and maybe more stronger than regulatory wise, because it's just the market that demands a specific type of product and you need to adapt yourself. And then if you look at more general real estate, of course, if you want to attract best talent, I think you also should have a clear strategy around ESG. That is very obvious today. That's also a very good approach to adopt that. And then those reasons in real estate are then also mirrored to the companies that we look at within PropTech. So if they see a need within real estate, then of course a business model gets created around that. That's why I try to look at it from the real estate pain point of view. And I'm a little more traditional, I would say, than yourself, because we really look for an ROI, and I do believe, I honestly believe that the fact that ESG and ROI can go hand in hand, and that actually should be the case. So impact is crucial, but only with a clear ROI in mind. That is my honest opinion.
Okay, I agree, because it's not sustainable otherwise, if you're not profitable.
Exactly.
What's missing, Adrian, in the pitches you see? General, and
it's oftentimes it's about having a clear strategy, because when you're an entrepreneur, you have thousand stuff to do in your businesses and in day-to-day operations, take care of, to think about, and oftentimes you don't have just the brain power to protect yourself on 3 to 5 years, and more especially in terms of impact, because sometimes it's not a priority. Because you think about survival, you think about cash, you think about employee retention, getting customers, and sometimes it's not what you put forward, in terms of priority. And we are here as a professional investor to tell them now, and with our money, with the money we invest in, we'd like you to focus time and resources on this, because we're convinced that it will create value for the society, obviously, and for environment, but also for our shareholders. And as you said, it's without profits, there's no sustainability possible. There is no ESG, there is no impact that's lasting. We don't invest in NGOs and charities because we're not a charity business, clearly. But yeah, so it's about.
It shouldn't be a trade-off. It shouldn't be.
It's always a trade-off, always. But you're right. Yeah, it's about how do you do that over a long time. But clearly, most of the times when I receive a deck, and they thought about it, there is one or two slides, maybe they're throwing out some KPIs, or some. But most of the time, they don't have time to measure it, to think about it seriously. And so we are here to tell them we're going to formalize this, and we're going to incentivize you to do more.
So for us, the diversity inclusion part that you mentioned is really key also when we look at companies. And that diversity will help you to retain people and to have high retention of your team. But also it helps to scale, because if you're already operating in a diverse environment, when you go abroad, then it's probably easier to integrate the team. Then when you want to acquire companies, you want to do some build-up, having already this diverse environment will help. But I think what we see is that complementarity of founders that have different backgrounds between business tech, which is good. But if you have the same profile, the same color, religion, anything, then probably at some point it will become a problem, because of scaling the company will be even more complex to integrate other people with other backgrounds.
Thanks. About the future trends, maybe for a start, before the future trends, any good example of topics you like these days? The good and bad examples. You can give names, but if you don't want to, you can give only names on the good examples. What are the trendy topics in ESG, impactful PropTech startups today?
So I think everything related to affordable housing, Arne mentioned it, is really interesting. Our mission at Aviv is to unlock everyone's perfect place. So we want to make sure that housing is accessible not only to the happy few. So solution related to financing, that could be, for instance, tokenization, senior people solution. This one is interesting. And we're also helping as a company. For now, it's mostly association. So we're supporting an association called I Lodge You in France, that actually help people to find the right housing. But right now, in this space, we're mostly looking at associations. So for us, it's more charity, so giving money, but not so many businesses on this space. So it's growing, but we will be really interested in this part. And the business potential is big. And as you mentioned, it shouldn't be a trade-off between the two. There is definitely something to do around affordable housing, and it's not only the NGO's job to do that.
Arnie?
Yeah, we see, of course, very exciting examples, but just to name a few, I think there's still a lot of low-hanging fruit as well, so we shouldn't look too far. But for example, energy savings, of course, we've seen the energy surge, or let's say the price surge recent months. I think looking at energy savings in office buildings, for example, we invested in a Swedish company called Mirspöven, and they can actually connect to any single building in the world from a distance without any hardware, without having any foot, let's say, on the field, and they can still connect to the building, steer the HVAC, and immediately gain 20 to 30% energy savings. What's there not to like? You have a payback of less than a year. So there's just basic stuff. But also looking at water savings, I think still a lot to do around water. The water prices are just way too low. It doesn't reflect the value of water, but we expect that it will increase tremendously in the coming years. So looking at water leak detection, looking at water recycling, that's a big topic for us within the built world as well.
Adrian?
Yeah, I fully agree. I'm not an expert in real estate, guys. We're a generous fund, and so I can't really. I've seen the same. I've seen businesses that are relate to the issues you say about water savings and energy consumption. And clearly, there's a huge challenge and huge savings to be made there, and the market is huge. What you said earlier is that I think both of us, we can relate to this. Part of our job is to prepare companies that are already startups, that are early stage, that are not that much formalized, to be interesting for you guys, for the industrials, for the industrial buyers.
So that will buy them.
to be interested for them, for you guys, because both in terms of business, you have to be profitable or to offer perspectives, but also in terms of impact. And as you said, most of the founders you speak to, they are obviously later stage and maybe the one who is investing, and they don't that much prepared for ESG due diligence or for impact due diligence, you know. And so part of our job, I think, is to get these companies ready for being sold or to grow, to maybe outgrow you guys, but to at least to interest you in terms of competition and of potential target companies.
Okay, anything to add?
Maybe just one thought that we're recently thinking about a lot is that we are VCs, and there are a lot of VCs focusing on impact, on prop tech, on increasing energy efficiency, etc., which is all very nice. But if you really want to make the energy transition from the built world to a net zero built world, there's actually such a vast amount of money needed. So apparently from recent research, apparently $80 trillion needs to be invested in the built world to make it net zero. $18 trillion, that's like a huge amount. So it will not come from VCs alone. We need a lot more capital to be deployed. So we can invest tickets, a couple of million into equity of a company, but actually we need asset financing because there's a lot of tangible stuff within the energy transition, right? Hardware, we need different building materials. And that's, I think, the biggest challenge is that we need a lot more money to flow into that space, and not just from VCs, but we need institutions like banks to co-invest. We need large equity checks like the Blackstone, BlackRock, those type of investors to really pour vast amounts of money into those companies. And making partnerships like with VCs like us, combining with large capital allocators in the industry, that is, I think, a very interesting combination to be made.
Our funds are open for business.
80 trillion, it's interesting because it's 20% of the UN, when they launched SDGs, assessed that solving the SDGs, solving poverty in the world, would cost $89 trillion. So 25% for housing and real estate. Okay, thanks. Thanks. I was very lucky to be chatting with you guys today. I hope it's very short, but I hope it was very helpful for startups to, for a start, be more aware of what's happening and how they could progress. Thank you guys, and enjoy the rent.
Thank you very much.
Thank you.
Thank you guys.
Thank you.
Nice to meet you.